what I really want to know, and I think what's really important is the financial side of the business, where I know you've raised money, a fairly decent amount of money. It doesn't look like the company needs money. You've been investing your money wisely. How do you see the finances of the company over the 2021, 22 as you ramp production? What are your capital needs? Are you coming back to market? Where do you see sales over the next couple of years?
Before Mark answers this, I want to jump in with one thing just before we look forward to look back. Like when I was analyzing Arcimoto before I joined the board, I had never seen an EV company be so efficient with its capital other than Tesla. Like Mark can correct me if I'm wrong, but it took about 40 to 50 million of dollars to develop and build this factory and get it to live production. Like you look at any other EV startup, they're just bleeding money, spending it like crazy.
It's his own money. He
exactly.
put money into it. All these other EV companies are a guy with a piece of paper selling some bull crap to somebody to outsource everything. You know what I mean? And it's a big difference when you put your own money into things and you build your own company.
I definitely found that we had, I think there were a couple of reasons why we had real discipline around cash. And one is that I did put in, the first real sizable chunk of money to get it going. And I've made significant investments in it over time. And so I look at every dollar that comes in from an investor in the same way, right? It's, we try and make sure that, it's something else. I mean, it's something we learned. We bootstrapped our game company, Garage Games. And it was like, let's make sure that every dollar goes on the screen, right? That we're not wasting, that we're really moving the needle forward with the money that we spend. And so the other reason is that as an Oregon vehicle startup company, I mean, we aren't located in Palo Alto / Fremont. We are, the sources of capital have been, sort of few and far between, particularly in the early years. And that, I think, just by necessity, we had to be incredibly efficient with cash. And that has stayed as really a core philosophy of the company. Where efficiency is our mandate in the vehicles we build and the energy we use, and capital is a piece of that. I would say that 2020 was definitely a watershed year in terms of the capitalization of the company, because I was thinking back in over the 13 years of the company's existence, in a super majority of those months, we had, I would imagine, I think less than 3 months of runway in the bank. So we lived through, a decade plus, just right on the edge, where we had to make really meaningful progress with every dollar that we had. 2020 allowed us to finally flip the equation. We did 5 financings that netted 56 million. And that put us in a very good position to execute going forward in 2021 and 2022. We do think that getting to mass production, I mean, if you think about building at a rate of 50,000 units a year, if we are able to sell at an average selling price of 15,000, that's significant revenue. And to get there, it will require some more substantial investment.
Right.
We are looking for the bulk of that scale financing. We are looking to the Advanced Technology Vehicle Manufacturing Loan Program through the Department of Energy, which is if you think back on the history of Tesla,
right?
They went public to sort of get booted up on the factory, and then they got the ATVM in order to scale. And so we think that there's there are some very clear, bright examples of companies that when the federal government has put skin in the game, that it's worked out incredibly well for all the stakeholders. And so we're going to absolutely make that same argument to the Biden administration regarding Arcimoto and our path to scale. We are also, though, in a different position than we were in the market, certainly a year ago. And so I think we will continue to be opportunistic about raising cash, both from the public markets and from the federal government. I would say, though, that, and I think this does come down to the difference between, being a founder CEO with a ton of skin in the game and a more of a hired gun CEO, is that I am hyper conscious of shareholder equity and of dilution. And so I think I've tried to be very careful about making sure that we grow the pie faster than we shrink the slices.
Right. Right. Well, it's amazing you said that, because that's an incredibly important point. Being a CEO, founder myself, I 100% agree with that thinking, because people are like, why don't you raise money? Why don't you do this? Because I'm like, I don't want to dilute. Like, we're killing it. We don't need money. It's like, you own this. It's your company, so it's like you're not as quick to just like print money and like pay yourself kind of thing. And I think that's a great thing for investors to know, like that the CEO has his skin in the game and he's thinking like an owner, and it sounds like it should be like this everywhere, but it's just not.
Well, and you also think about, one of the arguments that Galileo has made is that companies should start putting some of their balance sheet into cryptocurrencies.
He's a kid.
Because you've got governments, running the printing presses on fiat currency. And I would say that, to me, I look at that the buffer of cash that we need
Right.
for achieving next objectives, but that there is a definitely a finite number of $ FUV that I'm in control of, that the board is in control of. And so we don't want to turn that spigot on when the cash spigot is sort of blasting cash into the market.
Well,
So,
I think this push for companies to put their cash into Bitcoin is a little bit not fully understanding the way companies operate. Like a lot of companies, including mine, we have a lot of money that we just need to have as a cushion, and it's not meant to be fluctuating, and it's irrelevant. But then we have, like my company, we do have an investment account, and I'm fine putting that money in Bitcoin. It's in stocks and bonds, but that's excess capital. Most companies, the capital they have is an excess. So I think it makes sense for Apple maybe to buy some Bitcoin, but certainly, maybe even Tesla now that they have 19 billion. But, for most companies, it's about where's my capital going to be spent, and what's my return going to be for doing this. And so having volatility in your corporate finances doesn't serve your shareholders,
totally agree. Yeah, no, we're not, currency speculation is not part
Right.
of our.
And like Arcimoto needs the money right now to build their products, and like in the short term. So like, I think from a treasury investment perspective, it makes a lot of sense to invest extra money, but for startups, it doesn't make any sense.
Yeah, I think at the point, I mean, we're certainly a conversation we could revisit when we are cash flow positive and printing.
Yeah, like when you're calling me up saying, hey, we got money to put aside, what should we do with it? Yeah, that's a great stage to be in,
Yep.
But right now you're the capital, eater. You need the capital now, and that's going to be the key to your success, actually, is having, good liquid capital to build the business as rapidly as possible, because I think the demand for the product is going to be there.